Jason Su is founder and CIO of Reliant Global Advisors. So, Jason, what is your single best trade?
All right, my single best trade so far and continues to be is EDU, Oriental Education and Technology. Now, this is a Chinese company, or at least it sources most of its revenue from China, but is listed as an ADR in the US.
So, why do you like it?
Well, a little more than 3.5 years ago, it was trading at $196 a share. Today, it's at 78, so less than half of where it was, but it's making new highs in terms of revenues and new highs in terms of profits, and projected after the 50% growth this year, projected to grow at another 33% on its EBITDA.
So, what is your price target on the stock? The consensus right now on the street is for $103.
Well, at the current pace of growth, right, this is both the company itself, but also on the backdrop of this massive China rally, we're actually a bit more optimistic than that. I can easily see it getting close back to its historical high. And just to give you some historical context, back when it was trading $196, there were a lot of competitors in the for-profit educational space in China. And I would say for us in the US, for-profit education is not a thing, but in China, it's considered to be more important than buying your house, spending money to buy a car, right? It's to spend money to give your kids an edge in education. It was a crowded, competitive trade 3.5 years ago. A Chinese policy came through from Beijing that knocked out all of EDU's competitors. So today, it is almost the only game in town, and it's now looking at higher profit margin and ever faster revenue growth.
So, you see the stock going back to 196. What's the time frame around that?
Well, time frame is always a hard one. I would say the positive momentum is certainly behind it, and it's more than myself, right? We're seeing a lot of analysts giving it an upgrade. So I don't think it's beyond the possibility to see something, over the next 12 months, given the positive overall market momentum and specifically the momentum behind the stock.
So, what gets the stock there? Besides giving me a number, I like to know what are the fundamentals that's going to get it from where it is right now in the $78, $79 range to get it way up to 196.
I would say the big catalyst is, of course, shares buyback. Now, the company has already come out early part of this year with an aggressive $400 million shares buyback. Now, the Chinese government had just made an announcement that it is going to make $300 billion in terms of credit facility to companies who want to do more shares buyback. And I think EDU is lining up to get along to do more of that. Of course, it itself is sitting out almost $5 billion of cash. So it could fund actually a much bigger buyback. So I think that could be the catalyst signaling that the management does see this as a undervalued stock, and it does signal its own confidence in continuing this neck-breaking growth speed, right? 50% earnings growth this year, and projecting at least to hit 33% growth next year.
So, beside a stock buyback, are there any other drivers that would help move that stock up?
Yeah, another driver, and I guess it's a longer-term driver, but it's one that gets talked a lot about, is the fact that demand for tutoring, especially for studying abroad, and this is what EDU is known for, right? The founder, affectionately known in China as Instructor Yu or Professor Yu, he is actually credited by most of the famous Chinese scientists, entrepreneurs in the US as the man who made the foundational difference to help them score a high score on the SAT, on the GMAT, on GRE. They come and study at the most prestigious institutions in the US. Now, in China, it has become, again, fashionable, important to study abroad. I think there was a 5-year lull where people go, oh, you don't want to go study abroad. You want to stay in China so you don't, miss the phenomenal growth. But now with China struggling a little bit the last few years, a lot more people are, again, rethinking, I need to go abroad. It's a great backup plan, and it may actually be the best primary plan for anyone who's a top student right now. And so that is fueling a lot of demand right now. And EDU is the only game in town right now in that space.
So, what could go wrong with EDU? What are the major risk factors?
Well, so it has gone up 20% in a very short spurt, right? So anytime a stock has done well, you do have natural selling pressure, people who want to take a quick profit. So I think as it continues to make highs, right, we're going to hit some resistance where people are looking to take profit. And I think that's not just true for EDU, it's broadly true for a lot of Chinese shares who in the last 2 weeks have all produced spectacular gains.
Now, as you mentioned, this is a China-based company. So how much are political headwinds a challenge for this stock?
Now, fortunately, this is a very domestic stock. It's not involved in AI, it's not involved in semiconductors. So none of the tension or the sensitivity that's between US and China has any play on this particular stock. Now, the fact that it's listed as ADR, meaning it's gone through all the hoops to make itself a proper company that does proper filing. It has a lot of US institutional holdings, actually. And so from a chassis perspective, there's also no concern with this particular listed company in the US. And so in some ways, this is perhaps more insulated from some of the fear that we might have with some of the AI companies, some of the tech platform companies that I think in the past few years has been in a crosshair for both the Chinese local regulators as well as American local regulators. Hasn't been a stock that had touched on either.
So shares of EDU are up less than 10% year to date, while the S&P 500 is up 20%. So comparatively, what's holding EDU back compared to the broader market?
Well, it's been a tough year by and large for Chinese stocks until about a week ago. And I would say if you were looking a week before, EDU was probably lagging even further behind Nasdaq. And so I think what you're finally seeing is a reversal, I would say, in market sentiment, with people perhaps a bit more in a profit-taking mode in terms of maybe selling into U.S. strength on the back of rate cut, and now trying to get in on the China momentum play. And again, the listed ADRs being more liquid, trading in U.S. time hours, are the easier target for anyone who's looking to get back into the trade, pocketing Chinese consumer confidence, regaining strength.
All right, EDU, the single best trade for Jason Su, founder and chief investment officer at Reliant Global Advisors. Thank you for joining The Street.
Thank you, Conway.